Good afternoon. A warm welcome on behalf of the Singapore College of Insurance to today's webinar on microinsurance. Let me have the slides, please, Darren. Thank you. My name is Perry Tan. I'm Head of Technical Training at the Singapore College of Insurance. I shall be your host and MC for today's session. Today's title of the webinar is Winning Microinsurance Models, Practical Lessons and Case Studies from ASEAN. Next slide. Let me just briefly introduce the speaker for today. Today, we are most honored to have Mr. Bert Obdebek. He is the founder of Microinsurance Master and Microinsurance Advocate since 2006. Bert leads the Global Microinsurance Master Accelerator Program, which has supported 152 leaders from the 48 countries. And he has worked with stakeholders such as Milliman, ILO, and the Microinsurance Network. Next, please. Okay. This is the synopsis of today's session. We know that microinsurance is shaping financial inclusion across ASEAN, and basically it is aiming to empower low-income families with vital protection. So with today's session, we will look at what truly works in microinsurance through case studies and experience from the ASEAN region and kindly shared by Bert in today's session. Real stories from ASEAN will be shared. Now, before we go on any further, in case you're interested in other courses that we are offering, we have courses on AI ethics, AI essentials, as you can see, enterprise risk management, as you can see. Next slide. Okay, all right, very good. So, without much further ado, all right, let me just hand it over to the speaker for today, Bert Obdebek. Over to you, Bert.
Thank you so much, Barry, for the invite, and indeed also to the Singapore College of Insurance for allowing us to have this interesting session on microinsurance. Thanks everyone as well for joining us this afternoon, at least the afternoon for most of us. I see we're already with a good group with over 100 attendees. And I also recognize some people who come even from outside of ASEAN, from Africa and beyond to join for this talk. So indeed, as Perry said, I'm the founder and CEO of Microinsurance Master, which is the sector's first accelerator program. And we want to inspire and strengthen microinsurance leaders to provide more and better insurance solutions to low-income earners who need insurance most of every community in the society. And by having run these programs since 2018, worked with over 100 from what it takes to be successful in microinsurance. And today I want you to share some of these key highlights from that. And then particularly as it is indeed in the title, to also look at what this means for ASEAN. What are some of the lessons from ASEAN and for ASEAN that we can do? I'll start sharing my screen and then we'll get into it all. I also would like to invite you that throughout all of the session, please use the Q&A and to ask any questions that you may have. We'll have a look at that throughout the session, and I'll try to weave in my answers as we go along. And in case we haven't been able to address your questions, then we'll have some time at the end of this call to go deeper into those. So while I will be the talking head today, I really would love to hear from you. So any questions, comments, concerns, put them in the Q&A, and then we'll get back to you. Didn't come along. I brought this lady here. Her name is Ledelina, and she's based in the Philippines. And she's actually going to help us to introduce the story of microinsurance. So let's hear from her story before I proceed. Just one moment. All right. There's supposed to be a video that it's not starting, but I think let me then just walk you through it. As you can see, Ledelina is living in a low-income community in the Philippines. Our house that you can see on the background was devastated by a typhoon, and as you know, in the Philippines, a lot of typhoons happening on an annual basis. And thanks to microinsurance, she was able to quickly recover and get a feedback on the ground. And I think this is already a very important lesson for microinsurance. And microinsurance is not an indemnity insurance. It's not an indemnity cover that may provide the full coverage of the loss that someone incurred, but it is first and foremost an assistance. It is there to make sure that when people have a fallback in life due to health, a natural calamity, a loss of income, what may have you, that we can help them to get back up so that people can continue with their lives and don't need to struggle with all of the setback that they may have incurred. But as we also know, microinsurance is not a mini retail insurance. And so if retail insurance would work for the low income segment, then we wouldn't be talking about this as a separate subject. And so one of the key things is that we need to learn to unlearn. And if you really want to make a difference, if you want to be innovative and challenge how insurance has been sold, it is important to look at it with fresh eyes. And now I'm paraphrasing Gustav Argenson, who is the founder of Milvik Bima, who is active in a few countries in ASEAN, today still in Cambodia, and we'll learn a bit more about what they are doing in that country later on. But to set us on the same footing and the same understanding, I also want to make sure that we have a similar understanding of what we mean with microinsurance, because indeed there's different terms and terminologies out there. Sometimes you will hear a reference to inclusive insurance, and that's over here. So inclusive insurance is insurance designed for excluded or underserved groups. And low-income families are an important segment of excluded segments, but it could be other segments that are excluded, for instance, because of their health conditions, age, etc. So while inclusive insurance and microinsurance is sometimes used interchangeably, there is some nuances that we need to take into account, where microinsurance is really the definition according to the IAIS standard setting body that is designed for low-income families. Sometimes you will also hear about mass insurance, which is insurance that is designed to be sold through large scale of distribution channels, for instance, through ride-hailing apps or through online platforms. And they may also be reaching some low-income families, but the difference here is that mass insurance is not necessarily designed specifically for low-income families. So that is actually what we are going to be looking into in the next few minutes and this talk. Microinsurance, indeed. So one of the things that we can say is that today, microinsurance is still mostly an untapped need for low-income earners. And from an insurer's perspective, it still is a blue ocean. We're all competing for the same retail clients or higher segments, but low-income earners are still vastly underserved. There's too little outreach that they have in the cover that they need. And so while there is a need, it can also be a very attractive segment for insurers to consider to escape the red ocean and to explore how they can thrive in that blue ocean. And that's what we're going to do. But for that, we need to be on the same page first. And I would like to know from you as well, can you scale microinsurance? And so there is a poll that we have for you to let you understand what you think are the challenges when it comes to scaling microinsurance. So you can pick one of these to see where you stand and what you think is the key reason why scaling microinsurance is hard. Is it because of the low financial literacy of the target customers, the costs involved, the lack of trust, or maybe there is internal hesitance, and so not a full investment that we're making. What would be your take? Right. Let's see what the results are from your poll. Interesting. So the majority, almost 60% of you find that it's really about a lack of understanding among the target customers of what insurance is, followed by the cost aspect of it, trust, and a little bit of internal resistance, but that is not the main stumbling block of obstacle. Okay, that's very interesting. And so let's see how we can go about that. So now that you have voiced your opinion, I want you to convert, and I'm hiring you in the next few minutes to be on my board. We're going to have a very large board here. You're going to be serving on my board of directors. And I have this question for you. I'm your microinsurance champion, and I'm here to pitch that we would have to go into microinsurance. So we're serving an ASEAN market with 18 million of microinsurance clients, low-income earners that we can reach. And yeah, we are a top 5 insurer, both life and non-life. So we're doing well, but we haven't really cracked this market segment. So I would like to learn from you what would be the target that you have in mind that I need to reach in the next 3 years. So you can use the chat if you want to put in some answers of where you think that we should be going into. What would be, do you believe, the target that I need to reach in the next 3 years? I would love to see some comments here. I'm not sure if it's possible, if you can do this in the chat. Yes. Okay. All right. Thank you, Deepak, for opening the eyes and breaking the ice at least 5% by year 3. Okay, so that would be like 400,000 if my math is doing okay. Good. Who else thinks that where should we at? Where should we aim at? How many people should we reach in 3 years if this is our potential market? So that's 5 million that Deepak said, not 400,000, of course. Who else? Who says higher, lower? Okay. You can either use the chat would be best, or you can use the Q&A. 20% by year 3, depends on the funding. All right, good. So let's see where we're going to end up with. So if this is what you're asking me, so you want to have 4 million, 20%, that would be already 16 million that I need to reach by year 3. So let's fast forward and pretend we are already in year 3. And this is what I have to report back to you. So by year 3, I was able to get you 120,000 enrollments. So I understand this is way below the target that some of you board members have given me. But I think that we did learn a lot of things. We learned a lot of things about how the microinsurance market works, and it took us some time to explore that. We tried to sell directly, but we figured out that today the best approach to microinsurance is to go via partners. And as I'm reporting back to you, my fellow or my dear board, I can tell you that we are in talks with some partners, some MFIs, apologies for that, who are keen to be our distribution partner. So I'm asking you, can I proceed with the same target in mind, to continue for another 2 years? Who says yes? So please, who says that we can indeed continue, and who would be more skeptical about us continue? It looks like the chat is disabled, so you can put it in the Q&A. Anyone who opposes for me to continue for another 2 years? No, that seems like most. Okay, I get some conflicting messages. So some people say, please do stop. You can't continue any longer. This is not making any sense. Yes, continue. Continue for another 3 years. The numbers are really conservative, but I would still approve to proceed. So it looks like the majority of the voices raised give me another chance, for which I'm grateful, because I'm really passionate about this and I want to make this work. So I will continue. And by year 5, remember, you gave me some targets of 4 to 16 million. But by year 5, indeed, we opened up that microfinance partnership, but we only reached 600,000 of enrollments. So still tremendously below target. The reason being is that it took the MFI some time to get to know us, to pilot. But yeah, I think we've proven that we're onto something. You can see how we have really grown, and now that the pilot has been successful, we're going to roll out with that MFI, and we can indeed proceed. So again, I would like to get your consent that I can continue working on this. And next to the MFI, we're also working with other MFIs. I know we're already longer running this than we intended to, but want to know if you're okay that I continue a little bit longer. Yes, continue. Thank you so much for the heads up. So let's look where we ended up in year 7. So by year 7, I have some good and some bad news. So the good news is that we continue to grow. So if you look at our growth rate from 600 we went almost to 1 million enrollments, which is the first line on the list. We also have generated over 5 million of premium income, but I'm sorry to report that our claims ratio skyrocketed too. And we actually had a big disaster. There was an earthquake, and as such, we had over 7 million of claims. So we have a claims ratio that is exceeding our capacity, and that's in the red. So with this, for the last time, I need to ask you, should we pull the trigger? Is this still worth it, or should we proceed? We have gained momentum. We have 1 million clients. Other partners are seeing what we're doing. We paid claims well. We paid them on time. So there is an interest in the market to come and partner with us. But we have had a loss this year that is significant. So we'll adjust the product if you allow us to proceed. But we think we're onto something. Is my board with me, or do you think I played for long enough and we should pull the plug, and maybe you should fire me? Okay. Most of the people who raise their voices say that I can proceed, that we can continue. So I want to thank you once again for your trust. And I think it's a trust that I will not abuse, and I will prove that you will given me a trust that I deserve and that the microinsurance clients deserve. Because yes, indeed, this is what happens by year 9. We jumped beyond the predictions that we gave. So by year 9, we are with 18 million of enrollments, with 18 million of microinsurance premium income, have been able to stabilize our claims to 4.5 million. And I think what we can see here is that the fact that we paid claims and we paid them well, that it actually responded to the concern that you raised at the start, namely that people don't know insurance. What we have seen here is that because people have been benefiting from the cover, they have seen how it works. They and their fellows, people who live in the same community, family members, have now built trust in what we do, and also the partners. So that's why we have been able to grow to this extent. Thank you for your trust. And I'm happy to share that this case study is not a fictive case study, but some may know it is actually the story of Pioneer Insurance in the Philippines, which is globally recognized as the most successful microinsurance story. So in hindsight, you can see the blip in the claims over here. This was happening in 2014. There was a Typhoon Haiyan, what happened there. And because Pioneer serviced the claims well, and indeed suffered from that, but they continue to invest in what they did, it actually led to quite a growth, with now reaching over 31 million of microinsurance enrollments and 70 million of premium income. So they are do the walk of the talk and prove indeed that you can scale microinsurance, that you can do well by doing good in this micro segment. And I think this is very inspiring and strengthening. In particular, it is a case also from ASEAN that is showing how you can do that. Good. And so Pioneer is not alone. Luckily, there are more pioneers and champions out there. The Microinsurance Network, they run a regular landscape study, and they say that, well, if we look at the low-income segment communities, there's about 3 billion of people who fit that definition of low income. And they have identified 350 million people covered in that segment. Do note that this is a self-reported study, so it's not that this is an all-inclusive, and there may be some insurers who didn't participate, and so the number may be higher. But this is then can be seen as a conservative estimate. In Asia, there is about 260 million people covered. This is a large part due to large Indian schemes who are government supported, but still Asia is leading the chart when it comes to the coverage of microinsurance. But as you can see also in the graph that we showed, there is an inconvenient truth. And the inconvenient truth is here, the early days. In the case of Pioneer, it took really persistence and strong leadership from a board like yourself to say, yes, please proceed, even though the numbers were not very exciting in the early days. But that investment eventually paid off very well indeed. But the inconvenient truth is that it is something that takes time. Like with any innovation, it's not a linear growth, but very often it's a kind of a hockey stick growth, where in the early days, a lot of things are happening beneath or just slightly above the surface, which might not look very exciting. These are not vanity numbers. These are not numbers that you can brag about at conferences. But it's a very interesting and necessary time. This is when you are just putting your seeds and the little plants are starting to germinate, rather than already the blossoming of your plants at scale. And what we see is that a lot of the schemes, they get killed here, where we put very ambitious 3-year term targets that are not reached, and then the pool is plugged. So something needs to happen to bridge that period. And luckily, Pioneer truly was a pioneer. They started in 2008, so there was not really a blueprint. And today we can learn from champions like Pioneer. That's also what we do with the Microinsurance Master Accelerator program, when we go for 2 weeks to camp out in their offices and to learn from them. But luckily, there are more champions out there like that. So today we can say that this long period of trying to get things work, we can speed it up, we can shorten it through to some of the lessons, and I will share some of them over here. Good. Now let's go then into what did Pioneer and fellow champions figure out? What are some of the key success ingredients to be successful in microinsurance? And before I give you some answers, I would love to learn from you. So here is the second poll. what do you think is the biggest driver of successful microinsurance adoption in ASEAN in particular? Is it to develop customer-centric products, to have effective distribution channels, to have a strong regulatory support, or is it most importantly to have strategic partnerships with NGOs and other communities? What do you think is the key driver for success in microinsurance? All right. I'm keen to learn what you came up with this time around. Interesting. So, number one, you think it's about customer-centric products. That is really important to design solutions that speak to the needs of the communities, followed by the strategic partnership of NGO and communities and distribution channels. And probably on how you have been reading the poll, number 2 and 3 may coincide. And strong regulatory support is voted 11% of the times. And this is a very interesting element. And I agree. It's also obviously the regulatory support is very useful and helpful. And it can enable the sector to a large degree with facilitating adapted product designs, claims handling methods. So regulatory support is highly needed and supported. But like the case we just showed from Pioneer, who at the time didn't have already a full suite of a microinsurance regulation, a lot of things can be done within the existing microinsurance or insurance regulatory framework. All right. So let's look at what are some of the key success ingredients. How does a successful microinsurance business model look like? And we see that we can split those into 3 important pillars. One is to organize for innovation. That means to set up a team that is dedicated to work on this specific challenge. It's not business as usual, so you need to do something different. So you can't just do this on the side. A second element is to have strong distribution partners. This came out of the poll as well. And a third is to be customer-centric, to have a deep understanding of customer needs. Ultimately, and I think this is also a very important piece here, is that what we see is that you really need to have a B2B2C setup. If we look at, I'm going to come back to this in a moment. If we look at distribution channels, again, this is coming from the landscape study from the Microinsurance Network. From the ASEAN countries, there's 3 that they have included in the research. It's Thailand, Indonesia, and the Philippines. And what we see time and again is that in microinsurance, it's really hard to have a direct selling. You gave that answer already. Why? It's because there is no trust in the insurer. People don't really understand insurance. And so if an insurer who doesn't have a distribution outlet and channels in the low income segments needs to go direct, it becomes very expensive. But if you can work with trusted organizations, with NGOs, with microfinance institutions who have a trusted relationship, both it will be easier to promote and sell the insurance, but also to have all of the administration around the selling of the policy, the claims handling organized. And so this is also reflected in what we see, how insurance is sold. Yes, agents and brokers can still play a role, with this caveat that the agents and brokers that are listed here are not always the traditional agents and brokers. These may be agents that are linked to an MFI, for instance, as well. But we see throughout that indeed there is a very strong, a need for alternative distribution channels. But if we say about being customer-centric, let's then indeed also look at it in that order and start with these elements. So I will give you a short example of each of these key success ingredients on how that really plays out. So when we think about being customer-centric, it's about responding to a need, designing a first-line support, and to be there in times of need. So this is how this can play out in practice. If you want to respond to a need, it means that you want to build solutions from a deep understanding of client needs. In other words, you can't do this from the office. You need to go outside. You need to go and empathize with clients to really to build a deep understanding of customer needs. For most insurers, the microinsurance clients, the low-income communities, are an unknown customer segment. You don't have mortality rates. You don't really have a granular understanding of the needs. So you first need to build that by going out and empathizing, by understanding what are the main risks, what are the main needs. And while the bigger kind of headlines may be clear, it could be health, loss of income. It's also about understanding a more granular understanding of like, okay, in health, what is the specific issue here that is bothering people to access healthcare? And so it's really helping to understand. And then from there, to build prototypes, to test, and then to until you have a product market fit before you can scale it. This is called the design thinking methodology, human-centered design, that I think is very appropriate in microinsurance, and we see this as a successful process applied throughout the world. And this is also one of the reasons why you have that hockey stick growth in a product adaptation, because all of these is already when you are trying to sell a product, but you still need to build, measure, and learn until you can really scale it all. Next, you want to design a first-line support. And Bima, Milvik Bima, is doing that, for instance, in the programs that they run in Cambodia. So what they want to do is they want to be top of mind when people have health concerns. And that means that actually the insurance cover is this one. It's called Bima Family Protection, which is the hospital cash. So that means that for every day you're in the hospital, you get a payout. You get basically a loss of income a payout for every day that you can't get to work. But it only happens that often that people have to go to the hospital. And so how can they benefit the policy even if they're not hospitalized or someone in the family is in the hospital? So that's why Bima came with a whole suite of elements that kind of complement what they're doing here. So you have telemedicine, you can talk to a doctor, you can chat with a doctor. They also have a prescription service, home delivery in the bigger cities. And one other important element that they figured out by really listening to the clients is that they can make appointments online via an app, because they saw that people had to travel from the village to the main town to go to make an appointment and then travel back. So that was very costly because they had to go into town, but also it was a day that they couldn't do their economic activities and as such didn't have any income. They also provide pharmacy discounts, etc. So with that, what Bima Milvik wants to do, wants to be the partner of choice when people have health concerns. So they want to have a comprehensive, holistic solution rather than just being they provide an indemnity cover. And one of the key elements there, when you want to do that right, and that brings us to our next point, is that you need to be there in times of need. When we're talking about insurance solutions for low-income earners, we're talking about people who have very little financial resources, typically not a lot of savings or what have you. So here's a picture from a market that burned down early last year. This is an example from another continent, from Ghana. That market burned down, and so all of the market vendors, they lost their place to sell. They lost their inventory. They lost a big part of their economic livelihoods. One of the insurers that had clients in that market, they paid out in a matter of days. The result was that these 200 clients they had in that market immediately could start afresh. They could buy new inventory, and on the adjacent streets, they could start selling again. Whereas the people who were not insured or did have insurance but were still waiting for a payout, they were still struggling because they couldn't really start anew. And that quick action was beneficial to the insurer as well. They had about 200 clients in that market who received the payout within days. And by the end of January last year, they already grew to 500 clients in that market. Again, because people saw that it worked and that it was something that was useful when an event like this happens. But imagine that an insurer would have delayed the payout, that it would have taken weeks or months, then people would have struggled to cope with that lack of income. So microinsurance is helping people to manage the cash flow in times of need. And so a critical element here is indeed that you can provide a payout when people need it the most. And as you can imagine, for insurers, that means that you need to go back to your drawing board on how you handle claims. You can't apply a typical claims process because that takes too long and it will also be too costly. So you need to rethink how you can go about claims. Good. We're going to move to the second part about being the distribution partnerships, but let me see for a moment if there's any burning questions that I need to answer that are on how you can be customer-centric. If you have any questions on that, please put them in the Q&A, and then I can integrate them in what I'm talking about here. Good. One great question is coming from Tai, who asks about the affordability to pay for insurance. I think this is a great point that I skimmed over. So let me address that here. So you can see indeed that what we say, it needs to be affordable insurance solutions. So what is important about this, and thank you so much for raising this point, Tai, is that affordable doesn't mean cheap. Affordable meaning trying to understand what is the cash flow cycle of low-income earners and how can you adjust to those? So give that example that we just had from the market. So people who work in the market, they have a high cash flow operation. So they have daily income. Every day they sell, every day they need to buy new inventory. So they have maybe a low margin on a daily basis to contribute to a premium. Contrast that to a farmer. A farmer may not have any income for weeks or months, but then on the moment of harvest, he suddenly has a bigger lump sum from which he can pay an insurance cover. So if you are going to work as an insurer with low-income communities, you need to understand what are the customer segments that we are serving. And not all low-income earners or low-income communities are alike. If you would be servicing market vendors, you want to design a policy and you want to find partners that can maybe take a small premium on a daily or weekly basis, because that's what people can afford. But if you would work with farmers, you want to design your policy so that it coincides with the harvest cycle of farmers. So for instance, in this market, you have microfinance institutions who do daily collections. That means they go around with all of the market vendors on a daily basis to contribute to their savings. So for instance, every day they would go around and they would receive $1 or $5 that will go into the savings. And from that $1 to $5 savings, there is a tiny part that goes to the insurance. So this is how insurance is made affordable in this case. All right. Good. Second element, second pillar on key success factors is to build true partnerships. I think the image from the market that we just saw indeed signals that this is really hard for an insurer to have coverage in all of these markets across the country. So you want to rely on MFIs, on cooperatives, on associations who can do the front line for you. They have a trusted relationship with the clients that you serve. And so they can really also help you with building and scaling in a cost-effective way. So first off, you want to upgrade the core business. So one of the mistakes that happens in microinsurance is that we continue to use our playbook as we know it. That means that what do we offer to the distribution partner? Commission. All right. Now you can do the math yourself. If I'm an MFI, the one that I just gave an example of, and you say, well, we are going to have a premium of $1 and you get a 20% commission of that, that's 20 cents. That's not going to be a very attractive value proposition to me because I'm going to do a lot of work for that 20 cents because I need to talk to people, I need to convince them, I need to do all of the registration in the premium, all of that for 20 cents. That's going to probably not really excite me to do this at scale. So one of the key things that we see that you need to do to be successful in microinsurance is you also need to understand what are the key value propositions, the key services that a partner like microfinance institution is offering, and how can we increase that value proposition? For instance, by driving customer loyalty. Because you have insurance embedded in your savings, people prefer to save with you rather than with a competitor. Because it can indeed increase to your profitability of your core business because some of the risks are reduced. And it can give you a competitive advantage. So there are some reasons that you need to think. So when you go to a potential partner, you just don't go there and say, okay, here's our product. Now you get 20%, you want to sell it. Here too, you want to be customer centric. And first try to understand the business of that partner, of that MFI, and say, all right, what are the key concerns that you're having? Which segments are very competitive? And then design together how you can build a holistic solution. Okay. So again, the example I gave, say an MFI serving market vendors versus an MFI serving farmers. You can imagine that the risks of those two MFIs are also very different because they have a different clientele. A key aspect here is not just to go with your product and try to push it and sell it and say, here's a commission, but together to design that microinsurance cover. Okay, you're collecting $1 a day from all of your market vendors. How much can you put aside for insurance? Okay, 20%, good. And how much do you want to earn on that as a commission? And that's how you design the cover to them to say, okay, this is what people can afford. So this is the kind of risks that we can insure indeed. Okay, good. And a third element here is that you want to compete on value. And we gave that example already from Pioneer. Claims, we have a really bad term for that, right? In insurance, we like to call it the loss ratio. It's amazing because I don't think there's any other industry that calls its core product, its core service, a loss. If you go to any other supermarket or you go to a consultant, if they need to provide services to you, they will not call it a loss. It just is providing the service. And I think here too, what we see is that claims, they're not an expense. They're not a loss. They're actually an investment. Because you can see how here they grew from 1 to almost 8 million clients just within a year and 18 million clients 2 years after this happened. And the reason is because people saw that it was not a scam, that it worked, that also the distribution partners, they moved and they signed on with Pioneer because they saw that their insurer that they had, they were not as proactive as Pioneer. They didn't pay as fast as Pioneer. So it's not just about paying, it's about paying fast and paying claims. And so this is something that you need to do. And if you do that well, then you can truly grow by word of mouth. You don't need to spend a lot of money in marketing campaigns, in advertisement. People will tell others this is something that worked. This is legit. This is something that really added value because look, my house uh, was blown away by the typhoon, but within days, I got money to rebuild the house. Again, the money is it's an assistant, so it doesn't need to be something that is necessarily very expensive or a very high claim. It's better to have a lot of people who can benefit the claim so that they can continue, that their cash flow is managed, rather than a few people who have a really big claim event. So also here, you want to design for that. Good. So let me see if at this point we have any questions on how you build true partnerships. I'm looking at the Q&A. So one other question is about the premium payment on a daily basis. How that happens with if there's a claim in the middle of the policy period, obviously. So what you consider is that there is a policy that is running, and for as long as you contribute your daily premiums, even if there is some lapses, sometimes there is some terms to that, you're considered covered for the entire period. Okay, good. Let's proceed to the third pillar, and then we can open up for Q&A thereafter. So here I first want to go back to you, and I want to learn from you in our third poll. What would be your motivation to be involved in microinsurance? So from your organization's point of view, why do you want to be involved in microinsurance? Is it because you want to increase financial inclusion? It is because you see it indeed, first and foremost, as an opportunity to increase your revenue. Is it mostly like outside of the main business, it's a CSR objective? Or are you looking to diversify your products? What would be your main motivation to be involved in microinsurance? And to make it hard, you can only choose one response. All right. Good. Very interesting and a bit more equal take than we had on the two previous polls. So number one is increased revenue. So this is the blue ocean where indeed a large segment of the population is not covered. So how can you indeed increase the revenue, not just by competing, but by expanding the pie? Financial inclusion indeed is also a very important element to several of you, CSR and product diversification. Very interesting. Thank you so much for sharing that. Right. So the third pillar that I want to talk about, and that links to the poll here, is if you want to do this right, you need to organize specifically for this. You need to set up your organization to be able to do that. There's three elements to it, which is you want to act on purpose, you want to assign a champion, and you want to learn to unlearn. So if you want to act on purpose is what we see. Remember the graph from Pioneer, that it takes a long time to really to get to a significant scale. What we've seen time and again is that this works best when you can align microinsurance objectives to your overall purpose. The purpose of AXA, for instance, is to act for human progress by protecting what matters. And AXA globally has a dedicated microinsurance team. They call it AXA Essential, and they're operating as well in Indonesia, the Philippines, and Thailand. And in Thailand, for instance, AXA has what they call an employee care program, which is an entry point to that starts with services, with health services, not so much insurance. So what they provide with that employee care program in Thailand is preventive health checkups on site for blue collar workers, because they saw that often people struggle when they're ill, either to go to the doctor or they continue to work even though they're not feeling well. And what's interesting, it's a blend of digital and physical activities and services. So there's teleconsultations, medication delivery to the workplace. And this is interesting because it is also a way that it can scale. And because they do this preventive way, it builds trust, it builds daily relevance to a large worker group. The effect is that, so it's interesting for the enterprise, for the business, because they know that their blue collar workers, they have something that they can offer. So it's making it a better place to work. Also, when people are sick, they're taken care of. So it's not something that is a burden to the employer. And as a result, for AXA, this both created a new access to employers, to new businesses who were interested in this, and from there to also to sell other insurance services that had a bit bigger ticket size. But secondly, it also opened the opportunity to cross-sell to the blue collar workers. So blue collar workers, they get to know AXA through their work. And then AXA is also offering additional services, additional covers like hospital cash models to those blue collar workers. So this is a very successful and integrated model that AXA is running in Thailand, but it could only work because from the get-go, the purpose, the North Star, was really what driving them. And so that gave them the time as well to kind of to see, we're doing this because it's aligned with our main purpose. And as such, we have some time to build and to grow from here, rather than we have to have it an instant hit within the next 3 years. A second important piece, I think, is something that we alluded to throughout. You want to learn to unlearn. That is, you want to start afresh. You don't want to use the same products. You don't want to use the same claims processes. No, you really need to think it through, and you want to do things differently. And the best way to do that is to assign a champion, to have an entrepreneur, to have that is an in-house entrepreneur who can really run things a little bit differently, which is you work with cross-functional teams, you are very innovative, you experiment a lot of speed going on, and you work with metered fronting next to the more siloed organization. You need to have that champion, but that champion needs to have a sponsor at the C level, the CEO or somebody really high in the organization, like you were my board, who says, okay, we give you the agreement, the commitment that you can continue to experiment for another 2 years before we proceed. So that, ladies and gentlemen, sums it all up. This is in a nutshell what we think are some of the key ingredients of a successful microinsurance business model. To be customer-centric, respond to a need, be there in times of need. To do that through distribution partners, where you add value as well to the core business, not just you sell your products, you push your products, and you co-own and co-design the product. And you need to set up a dedicated team, or at least start with a champion who can do so. In the Microinsurance Master Accelerator program that we run, we spent 2 weeks at Pioneer to kind of to unpack all of these elements in more details and to see it from the distribution partners. If that is something of interest to you, please, you can always drop me a line, and happy to share more about that. But I was keen to give you already a key takeaway over here. I want to stop this talk by saying, dream big, start small, but most of all, start. And with that, Perry, I hand it over back to you for the questions that I may have left unanswered, and to answer any other questions that may come from the audience.
Okay, thank you, Bert. I will encourage all to post questions if you have. Please post it in the Q&A. I think there are a couple of questions that perhaps still need. There's one from, it's anonymous, but it says, is the remaining due of the premium become due and demandable, or the payment of the claim become proportionate to the premium paid?
I suppose this is alluding to the daily contributions, right? So there's different models to that. So when it's linked to the savings, so for instance, the policy can be weekly or monthly, and then so you're supposed to continue indeed to pay as you do for any other policy. You have also other models where people take a loan and then pay the premium in full in advance and then basically pay back the loan so the premium is paid upfront. So this can depend a little bit on the specifics, and that's why I said also in the conversation that it's important to really understand the specific customer segment that you're serving. One of the challenges that we have seen is that sometimes like, oh, we're going to serve the low income earners, and it's like one big unique and similar customer segment, which it clearly is not. People in an urban and a rural setting, people who have daily income, people who have irregular income, all of these things need to be considered, and you may need to tailor those to that. So even though the main kind of cover that you have may be similar, depending on your partner, one MFI, another MFI, a cooperative, an association, you may want to tailor the specifics on the premium modalities, the premium that they can afford, and as such also the protection, etc., to make it affordable for the people that you want to serve.
Okay, thank you, Bert. Another question is, are the claims on an indemnity or trigger basis?
Again, here it depends. So probably we didn't discuss that due to lack of time, but one of the models is index insurance, which is often used for agriculture. For instance, when there is a flood, then the index is triggered and everyone receives a payout, or when there is a drought. So these models, they do exist, and this is one of the ways that you can really scale this up. But still, we've seen, for instance, all of the example that I gave from Pioneer in the Philippines, it is more indemnity based. So it's really going house by house to see which of the houses are standing, which houses have damage, and to provide a payout. And again, that's where the distribution partner comes in, because this is not something that you can do with a small central team. You need to have an outreach in the community through MFIs, through cooperative and associations, who are trusted and who can then also be involved in that claim handling process.
Okay, and another question from Awan Siba Abisa. On the landscape study regarding the average premiums per region, why the wide differences and why is Africa and Caribbean so high?
That's a good question. I think there's some caveats to make here. First, it's self-reported data. So that means that it's not necessarily comprehensive. It also depends on the type of products that are reported here. So for instance, you may have more agricultural products. I believe in Africa and in Caribbean, and particularly in Africa, there is a lot of funeral cover. So that's a very important culturally spend part that people want to spend on. And so they're also happy to spend more on funeral cover in some markets. So that is definitely one of the drivers there. But I encourage you on the Microinsurance Network website, and the links will be in the slides that we will share afterwards. You can read the full report where it's also detailed further about what it all entails. And the Microinsurance Network has also a dedicated website where you can play around with the data yourself. So you can go in and then you can try to see if it's product dependent, is it the country dependent? So where really are the big differences? So that's, if you're into number crunching, that's definitely something that I can recommend to explore further.
Okay, I think we have time for one last question, and which is a question that I also wanted to ask myself. It comes from Lorraine Niekuraya. Good day, Lorraine here. How do we balance speed in paying claims with the need to manage fraudulent claims while minimizing costs associated with assessing and proving that a claim is genuine?
That's a great question indeed. And that's one of the things where we say you need to go back to the drawing board. The very short answer is that what you want to do is you want to price it in. So that is that instead of trying to go into a detective mode and trying to figure out, oh, is this a legitimate claim or not? Like, for every little claim, then you are doing the indemnity insurance as you do before. If you want to be very fast and you want to be able to pay out at scale, you will know that maybe sometimes there may be some of the claims that you will have paid who maybe not be legitimate. But what insurers do is they price it in. So they know that, for instance, we think there will be about, say, 3 or 5% of fraudulent claims. So we price it in. But what we do is we do have more meta-analysis. So for instance, after a typhoon season, we will then take time to have a more detailed review of what happened. And then we may see some cases coming back. And then we can adjust our terms or our policy to make sure that that is not happening again. So that is one of the things that insurers do is it's not that fraud is not a concern. It is something you want to identify. It is something that you want to take care of. But the way you want to go about it will be different than if you do indemnity insurance and you want to kind of assess every claim in detail. Very often it's not even worth it because it would cost you more than the claim itself. So it's that fine balancing act that you need to take care of.
Okay, thank you, Bert. We have come to the end of today's session. Thank you all for posing the questions. Thank you, Bert, for sharing your insight on microinsurance. Before you exit, when you exit the Zoom session, you will have an evaluation. We please request that you fill in this evaluation because any feedback that you can give us will be useful for us to improve and adopt any additional ideas that you have for webinars going forward. Once again, Bert, thank you. On behalf of the Singapore College of Insurance in Singapore, thank you all for attending. Good day. Bye-bye.
Thank you so much for having us and thank you
Okay.
so much for this talk. And have a
Bye.
great
Bye-bye.
end of your day. Bye-bye.
Bye-bye.